So rather incredibly, really, when you look at those pictures of New York and the surrounding area, the markets in New York did reopen on Wednesday. How was the trading, Matthew?
Yes, that's right. They managed to get things back up and running after 2 days of being closed. The New York Stock Exchange and the Nasdaq both in action, but markets pretty flat. The Dow Jones and the Nasdaq both falling very slightly there. Now, markets will have more to chew over on Thursday as a whole load of economic data comes out, from consumer confidence to construction spending, and then the big jobs report on Friday, just before the election as well. So that will be very interesting. I thought I'd pick out a couple of stocks that did quite well, and that's because they are DIY stores. And obviously after the Sandy storm, people will be needing to do things. Both Lowe's and Home Depot up 2-3% there.
OK, well, the market's open, as Matthew said, but many other businesses in New York still struggling, really, aren't they?
Yes, particularly in that southern part of Manhattan where power is still a problem. And we've been looking at Chinatown and Little Italy. Now, they're normally hives of activity, lots of tourists there as well. But post-Sandy, just a handful of businesses managing to reopen. And even those that have done so are facing costly damage and a lack of customers.
A closing bell that sounded more like a sigh of relief for Wall Street. New York's financial hub back in business after its first unplanned shutdown since the September 11th attacks. Just a kilometre or two away in Chinatown, Sandy's calling cards are everywhere. Some of the estimated $20 billion worth of property damage is strewn around. Analysts say the storm will also cost the United States between 10 and 30 billion in lost trade and stock, like at this fish market. The heaters and pumps failed in the power cut, and the consequences are clear. Down the street, Cindy Chung is hoping to trade, but the security grill on her shop won't open without electricity.
We didn't open yesterday, and we closed early on the day of the incident. So, yeah, we totally lost at least 2 days' business.
In neighbouring Little Italy, things are little better. Restaurants are opening their doors, but with no power or running water, the menu is limited. And as one restaurant worker tells us, the district is hardly buzzing with potential diners.
Without tourists, without business. No people, no tourists. This is the Little Italy now.
While public transport remains out of action, that's going to add up to a lot of lost revenue. Authorities still can't say when things will be back to normal.
We've got some better news for you. This is on the Chinese economy.
But yes, perhaps, Stuart, there's some signs that the slowdown in the Chinese economy is bottoming out. Now, this comes out of Purchasing Managers' Index information, the PMI data that we see every month. There's two of them come out of China, the official one and an HSBC one. Now, the thing to look for here is the figure above 50? Because if it is, that means things are expanding, growing in the manufacturing sector. As you can see there, the official one, it is, and the HSBC one is moving in the right direction as well. So that's good news on that. For China.
And Asian markets are enjoying those figures, I should think?
Yes, and particularly in China. The Shanghai Composite is up almost 2% this morning, and the others following suit, apart from the Kospi there in South Korea, struggling a bit.
OK, back to the bad news again. Greece, mention that word again.
Yes, Greece back in the limelight here in Europe because they have revised downwards again their projections for the economy in 2013. It was already looking pretty bad with a 3.8% shrinkage next year. They've taken that down to 4.5%, and debt as a proportion of GDP going up as well. This all as the government tries to get approval of its latest spending cuts. Once it's got that approval, it can then get this next loan instalment of 31.5 billion euros that it desperately needs.
And Portugal, they're also struggling to meet the terms of their bailout.
Yes, they got a 78 billion euro bailout last year. Some cuts as well they've had to make. And in fact, they got a relaxation of their deficit targets because they've been struggling to meet them. Well, on Wednesday, lawmakers passed a new series of draconian tax increases.
It's more bad news for the Portuguese. In a bid to reduce the deficit, Portugal's parliament on Wednesday backed an austerity budget, which includes huge tax rises. The bill yet to face a final vote later this month proposes a new tax on financial transactions, as well as massive rises in property and income tax in 2013. The government says its hands are tied.
The lack of a state budget would be in itself a serious infringement of the Troika agreement. A political crisis in those circumstances would expose Portugal to more risks.
In May 2011, Portugal received a bailout worth €78 billion. The European Union and International Monetary Fund then demanded severe spending cuts as part of the package. Ordinary Portuguese, already struggling due to cuts in public sector wages, took to the streets to protest against the latest planned cuts.
I'm here because I'm against all the measures taken by the government. They have to develop and stimulate consumption and give Portuguese people a chance to help our country.
MPs from the governing coalition, which controls 132 seats in the 230-seat parliament, voted to approve the budget. The bill passed despite MPs from the main opposition Socialists voting against it. The bill, however, could yet face legal challenges after a judges' union suggested it might break constitutional rules.
Well, now let's get some of the day's company news. And Sony has reported a $193 million net loss for the latest quarter. It's the 7th straight quarterly loss for the Japanese electronics company. Sony's cutting 10,000 jobs, about 6% of its global workforce.
Shares in Panasonic have tumbled by 20% on Thursday. The drop following a warning that the company will make a full-year loss of $9.6 billion. That reversed an earlier promise it would be back in profit by next year. Panasonic's struggling with sluggish demand and intense competition, particularly in its TV business.
And the car maker General Motors reported quarterly profits of $1.5 billion. That was down on last year, but better than expected. Company plans to cut 2,500 jobs in Europe this year, but markets liked its shares in GM closed the day up 9.5%.
Now, most airlines, of course, have an online booking service, but Matthew's got news of one that's just been launched.
Yes, it's taken them a while, but Air Koryo, hope I've said that correctly, from North Korea, has just launched its online booking service. Now, something to note about Air Koryo, perhaps, is it's the only airline ranked as a one-star service by the Skytrax Global Airline Ranking, and that rating represents very poor quality performance. There you can see the website. I should point out the airline has been making improvements to its fleet. It was banned for a while from flying in the European Union, but now it's allowed to with 2 new Tupolev aircraft that it's bought. Also renovated the airport there in Pyongyang. Not many places you can fly to from North Korea, though. I should point out as well, perhaps user friendliness is not that impressive on the site we just saw there. The International Business Times noted that it doesn't accept credit cards. Instead, you have to arrange an international wire transfer.
Ah, that sounds a little bit complicated. Okay. Air Koryo there. All right, Matthew, thank you very much. Matthew with the business news. We'll have the very latest news, the latest on the superstorm, of course. Claire will be here very shortly. 7 minutes.